get started really quick. So what we do is provide financing. I have a few projects going on in Oak Park right now, actually, where we are restoring some historic homes. We're also able to give people money for some, self-sustainability projects that, you were just talking about, or just updating homes, et cetera. So we're able to finance on a purchase or a refinance. I just wanted to start with a couple of photos of, homes we've done in other areas, but we do, again, like right now, I currently have 5 projects going on in actual Oak Park for renovation. So we're able to just basically, take any home in any condition, if you're buying an older historic home or, basically any home, and we can update it, use, energy efficient, anything to restore the properties to the condition that you'd like. And we can finance that by using the future value of the property. And I think that's important because some people may have a little bit of equity in their homes, but they need more money than the home value. So we are able to use the future value of the property subject to all the rehab that a buyer or a property owner is doing. So I'm just flipping through a few photos so you can see some of the work that has been done with our project, our financing on projects throughout the Chicagoland and Oak Park area. And then I'll talk a little bit about the programs and of course, open it up if anyone has any questions, specifically. So there's 2 programs available for renovation. We have what's called an FHA 203K rehab program, or we have our conventional renovation program. Both are great. Both allow the opportunity for a homeowner to, again, buy and update a home or refinance and update their home. Credit score minimums are typically 620. On one of the programs, it's more like 680. So we will, fit the program to, each person's profile. We do ask that the homeowners occupy the property for 1 year after they complete, their renovations or updates. If someone's buying a home in Oak Park and wants to do, some restoration, we can also qualify them if they want to stay in their current home while work is being done. That's not a problem. We allow for non-occupant co-borrowers as well, for income. So basically, we're just, regular mortgage lender that, for me, I specialize in this renovation financing, which again will help people get whatever funds they need to do the property. Also, a lot of the properties we do are not habitable. If that is the case, we can roll in mortgage payments for up to 6 months as long as the appraised value supports it. The conventional program has higher loan limits, so I tend to use that one a little bit more. However, the FHA program is also available. They just have a little bit lower loan limits, but they have more lenient credit scores and credit profile. Both are very similar in terms of properties that they allow to be done, which are single family, multi-units up to 4 total units. So they're, great for, again, a lot of properties in the Oak Park area. We also, on these programs, do release material funds to your contractor. I know that can be a big issue, like, hey, we have a great contractor, but they're going to need some material fund money to get this going. That is not a problem. And we also utilize what's called a HUD consultant on both programs. They actually come out, like if someone's, starting to think about doing a, restoration or, some type of energy efficient project, they will come out and help price everything out, this HUD consultant, to try to see if your, financing will work, if you qualify debt to income wise. They help work with the contractor to write up the scope of the work and make sure that no detail goes, untouched. A lot of times contractors might be a little less detail oriented, and you may think something's included, yet there's a lack of clarity. So this consultant is very clear on exactly what should be done, and they stay throughout the financing from start to finish. So they're involved prior to the loan starting, and then they stay throughout the entire loan to make sure the contractor gets paid out and they do the inspection. So they're very valuable to the renovation program. So with the program, work gets started once we close within 30 days, and then it has to be completed within 6 months. However, sometimes, we're in the Chicagoland area, as everyone knows. If there is inclement weather, we can extend it month to month up to 12 months. If a borrower or a buyer is a licensed GC or has a family member that is a GC, that is allowed for the program where they can be their own GC. So that's on our conventional program. On our 203K program, we very, very similar. These are both very similar programs, just with different, again, credit profiles and a little bit different income loan limits. But basically, self-help is allowed if, again, the borrower or the homeowner is experienced in the trades. The only thing with the 203K, which is our FHA program, a family member can't be a GC. We do a lot of transactions right now where tenants are buying from landlord. On our conventional program, it's allowed, but not on our 203K. Realtors can be blood relatives, give commission to the borrower to aid in like buying a property if you're looking to buy something. Same with the home style program. So, there's a lot of great opportunity here, with these programs. Here's the loan limits, which I wanted to present because I think, it's very important. I've done, again, a lot in Oak Park recently, where people might be buying a property for around 400,000 and wanting to do an addition or restore it. They might need 100,000. So in that situation, we'll use our conforming product because the loan limit's higher. So just showing the differential of loan limits for people, attending the call that they can see. That's one of the differences that drives me to, what I'm able to do for the borrowers. So that's a little bit about the program. I did want to open it up to like any maybe specific questions on financing or how it works. If there's any questions, I'd be happy to answer those right now.
So Chris, generally, what are you guys looking for as a down payment on a situation like that?
Yeah, that's a great question. So for the conventional program, which is the one I do use more, the down payment is 5% of the purchase price plus the rehab, not just the purchase price. So if you're buying for 300 and you need 100, we consider the total of 400 and then we would do 5%. So you would be giving us on a $400,000 loan about 20,000 and we would be giving 100,000 to the contractor to do the construction.
And then I saw that you guys will, you can fund up to 6 months of the mortgage payments.
Yes, if the appraised value supports it, we can definitely fund up to 6 months of payments so that there's not a hardship. The value does have to support it. We haven't really had many issues with that. I would say on 95% of my files, when I do need to roll in payments, I can. And if all 6 don't work, we can fit in whatever up to 6. If the value only supports 4, then we would do 4.
Okay. Now, here are some questions from the field. Are renovation loan programs available to finance purchases only, or can you finance on a home refi?
Yes, we can do both. As mentioned earlier, this is good for a purchase or a refinance if you own your home. In fact, I have 3 refinance going on right now in Oak Park for work that they're restoring their homes and doing updates. So homeowners can't, and why we use it on a refinance is often there's not enough equity to do as much work as the homeowners would like.
And also, now I saw this, can you be your own GC? No, but if you are a GC, then you can have a family member be a GC, is that right?
If the buyer or homeowner is a GC or in the trades, meaning like, licensed electrician or plumber, if you're a GC or in the trades, you can be your own GC on either program. But a family member can also be on our conventional program if they're in the, licensed and in the trades.
Okay. All right, good. Here is another question. Are there many real estate appraisers who are qualified to evaluate historic homes?
Yes, I mean, especially also renovation. It's both, things that they have to be familiar with. We do a lot of historic homes as well on the south side of Chicago. So yeah, they will be qualified in that field of not only renovation, but also historic homes.
Okay. Um, Now I have a personal question. Do you know a guy named Chris Singleton?
The
He
name sounds
recent
familiar.
he recently came over to guaranteed rate. And I'm not sure where he was before, but he's actually working with some clients of mine. And they are actually going through this exact program, I
Okay.
believe. And so yeah, it's taking a little bit longer, obviously, because of the multiple bids and also the HUD consultant.
Yeah, I mean, I think for me, I opened up the program here at Guaranteed Rate. I'm the actual one who brought it here. I have very, very detailed team that's been with me for 10 years, actually since inception. We've all been together since we started the program. So we have really amazing turn times, and really top-notch consultant, and things go pretty quickly for our team. So it does probably depend on where you landed, but definitely we keep our files moving pretty well.
Yeah, shoot, I wish I had met you earlier.
Well, that's okay. You know me now, so just
I do know you now. Yes, absolutely. Okay, another question from the field. What is the price cap on the value of a home that could get an FHA loan?
Well, it's driven by the loan limit. So the loan limit is over the. So if you're like buying a property, and want to do the minimum down, which is 3.5%, you'd be capped at about 382. But if you have, again, reasonable credit, which is 680 or more, that you would qualify for a home up to about 580. So FHA, you're about 382, and conventional, you're about 580.
Okay.
And that's with the minimum down. I do have people put more than that. So, I've done, some people want to put 20% down. And in that instance, when they do, they qualify up to about 685 all in, like if they're doing a refinance or a purchase.
Okay. Any other questions at the moment? It doesn't look like it. Chris, thank you so much.